Once you master the basics of binary options, you're ready to move on to some of the more advanced binary options trading strategies out there. These strategies can be complex because they involve thinking quickly to execute multiple strategies in a short time frame. For this reason, we say they're for experts only. Hi, my name is Reese Shapiro, and I'm your binary options trading coach. So far in our video series, we've focused on evaluating binary options one at a time. In this video, we're going to talk about advanced binary options strategy. And what we're going to talk about specifically is combining multiple strategies together for the purposes of increasing profits and minimizing losses. Now, this is the 8th and final lesson in our series. If you've missed any of the other lessons in the series, please go back and watch them before you watch this one. You need to learn to walk before you can run, and with binary options, you need to familiarize yourself with the material and gain experience trading the basic strategies before you move beyond the basics to some of these more advanced strategies. So please go back and watch all the videos in order. And make sure you watch each video at least once. Now, grab a pen and paper if you don't already have one handy so that you can jot down some notes or questions that you might have on this material. I usually find that this can help me learn new, complicated concepts more quickly and more thoroughly. Particularly with this lesson, a lot of this material should be new to you since these strategies are pretty advanced. So please make sure that you take the time to build the knowledge base. Don't move on to this video until you really feel that you've mastered the content in the previous lessons. It's better to wait and be patient with yourself. Take the time that you need to build that knowledge base. Now, in this lesson, we're going to learn some advanced trading strategies. In the past, we've talked about evaluating each trade individually, and that's generally a good idea when you're starting out. When you're a beginner to an intermediate, you want to take it one trade at a time. But sometimes there are situations where multiple trades can really help you. And how can they help you? They can help you make more profit, lock in profit sooner, and reduce risk. And how can you do this? Well, focus on one asset at a time so that you can develop an in-depth knowledge of that asset and how it trades at certain times of the day. That way, you can see opportunities and react quickly. You'll be able to layer multiple trades on top of each other in order to gain more profits, quicker profits, and reduced risk. So let's talk about an example where you can layer multiple trades. So why would you want to do this? Well, when I spend a lot of time analyzing a specific asset, I like to try to make the most out of that opportunity. After all, you've already invested the time analyzing the asset and understanding the price drivers at work. You know where your indicators are and your support and resistance levels. And as we talked about in our advanced charting lesson, there are indicators that can add to a story or confirm your thesis. So looking at this example here, we have a chart of the S&P 500. And we talked about this example in our advanced charting lesson. So you should be familiar with the concept of a breakout above a moving average. So here we have a breakout above a moving average. So right here, we see the asset breaking out above, in this case, the 20-day moving average. So that, to me, looks like a good opportunity to place a binary option call trade, a digital binary option. So let's say that you place that binary option call trade, and a few minutes later, as you expected, the market rallied, your asset rallied, and now you have this additional indicator, this crossover indicator. And this is a further indication that the market is likely to move higher. So what could you do there? Well, you could buy another binary call option because you've just got confirmation on your thesis. So you've got more evidence to support that thesis that the market's going to go higher. You buy another trade, it might have the same expiration or you might have to roll over to the next expiration, but it's the same underlying asset, the same direction. This is called layering. And sometimes you can get a few different trades layered on top of each other. For example, you've got these two. Now let's say you see this asset bouncing off again of that moving average. That might be another place where you would place a third trade, layer a third trade on top of your positions. Sometimes you can get 3 or 4 trades layered on top of each other as indicators are confirming the momentum. And the trades may or may not all have the same expiration, depending on how quickly these indicators come together. The point, though, is that you just add more trades onto that same asset before that first one expires as you get confirming data on your investment thesis. You don't have to wait until that first option expires before placing your second trade. So this way, you're able to trade more quickly and you can increase your profits as you trade more efficiently. Now, it's not always possible to do this. Don't feel like you need to layer every single trade that you do. If the charts don't line up, don't force the situation. But it's just nice to be able to add on to situations where it looks good to do that. Now, another twist to this is called stacking. And stacking is where you'd put on a few different trades, a series of trades at the same time, but you'd put them all on for successive expirations. So let's go over to the broker site so I can show you how to do this. So here we are on the Go Options trading screen. I'm going to scroll down a little bit so it's easier for you to see the trading screen. Now, let's say I'm trading the S&P and the direction looks good for an increase, but I'm not sure exactly when the market is going to increase. Now, binary options are very dependent on time. So what I can do is I can utilize stacking. So let's first change our asset to the S&P 500. Scroll down to equity indices. And you'll notice right away that there are several expirations that are available. So right now it's 17:07. I have a 17:30, an 18 o'clock, and a 21 o'clock expirations available. Stacking means I spread out my risk by investing in all 3 of these expirations. This way, if the S&P continues to increase for the rest of the afternoon, I'll make money on all 3 trades. If I'm wrong on timing, I'll only lose a third of my total investment. For example, if the market trades down initially, but then rallies by the end of the day, I'll make money on 2 out of my 3 expirations. So it's a way to spread out your risk across the available expirations. So the first thing that I'm going to do is I'm going to enter a trade for a 17:30 expiration. And if I wanted to invest, say, $150 total, I'll put $50 in each option. So $50 on the call option for 17:30 expiration. For the 18 o'clock expiration, I'll also put $50 on a call option. And for the 21 o'clock expiration, also $50. So I have to enter my trades one at a time, but you can see that you can do this pretty quickly. Once all my positions are approved, I can scroll down to my open positions and see my 3 options. Now you can see here that all 3 of them have pretty similar strike prices, the same or very similar start time, but different expirations. They all have the same investment amount, but these 2 are in the money while this one is out of the money. So you can see I have these 3 different expirations. If one of them ends up out of the money, I'll still make a net profit on my other 2. Now, I want to remind you that you don't have to do this with every trade. This tends to work best when there's a significant market price action driver in place. So if there's economic news coming out that will impact the market, or if there's earnings on a single stock that you think will drive the market for the rest of the afternoon, you can use this strategy. Basically, any situation where a trend looks solid for a while and you want to put a bigger total investment than you typically would on one option, but you don't want to place a huge dollar bet on any one trade. This is a good way to spread out your risk across 3 different expirations while still taking advantage of that strong bullish view that you have. Another advanced trading strategy for binary options involves trying to change existing positions in order to maximize profits and minimize losses. So let's go over to Go Options and you'll see what I mean. Here I am on the Go Options site, and specifically I'm looking at the open positions table, which shows that I have 2 positions currently open this morning. I have 1 call option on BP and 1 call option on the S&P futures. Now let's look at this bottom call option on the S&P futures. My strike rate is 17.42 and the current rate is 17.50. So it's in the money pretty significantly. I did this trade a little over an hour ago, and it doesn't expire for another few hours. It was almost a full day trade when I did it. I invested $25 for a potential payout of $43.25. One thing that you can do here is you can do what's called double up. And here's how you double up. You just click on this ×2 circle. And up comes this dialog box that asks you, basically, would you like to double your position according to the current market prices? If I go ahead and click apply, now I have a second option in place on that same S&P future, same direction, a call option, and same expiration time. So here, if I still feel good about the future of the S&P 500 for the rest of the day, I can easily double that position. Now, the ability to double up isn't always available. Sometimes you can double up certain trades when the double up icon is highlighted, but you won't always have that ability. Go Options sometimes also offers you the ability to sell your existing positions, and you can see that all my options are in the money and I don't have the ability to sell them right now. Go Options also sometimes offers you the ability to roll over an existing position. And rolling over positions is a good strategy when you have an investment which is close to being in the money, but it's not quite in the money and it's about to expire. If you roll over that existing position, you'll have another go at it. So if you feel like you maybe just missed on the timing, but it's still likely to move in your direction ultimately, you can try to roll over those trades. So Go Options offers you sell, double up, or roll over as alternatives to changing your existing trades. Different brokers will offer you different ways to change your existing trades. Let's go over to Option Rally, because Option Rally offers you the ability to roll over or to double up on your existing trades as well. So let's look at my existing positions here. Here are today's open positions right now. I have a call option on the exchange rate between the euro and the dollar, and right now that's out of the money. I also have a call option on the S&P, which expires in about 10 minutes, and that one is in the money. So for this one, let's say I wanted to double up. I can just click on double up and apply to do that. Now let's say for this euro dollar trade that I wanted to extend that option. It doesn't expire for another 2 hours, but let's say I decided I wanted to extend it. I can just click on the extend button, and it gives me all the choices for available extensions. In this case, the only choice is a 17 o'clock expiration. So to do that, I would just click apply. So you can see that it's really easy that you can change your open positions when your broker allows you to. And I've showed you a couple of examples of when and why you might want to change your existing positions to make more money. Now, since this is the final lesson in our series, I want to take some time to review some of the course material. You've come a long way in your learning process. We've covered a lot of information, enough to give you a solid trading background so that you can make money trading binary options. In the first part of our series, we learned the basics of binary options and the key characteristics of binary options, like underlying asset, direction, which means up or down, call or put, the strike price, the expiration, and the investment amount. We discussed the difference between call options, which are bullish and express the view that the asset is going higher, and put options, which are bearish and express the view that the asset is going lower. We talked about some of the advantages of binary options relative to other different types of trading vehicles. In particular, binary options are very short term and can allow you to make large profits even with a small move in your underlying asset. So you don't need to worry that much about the magnitude of the move. You just need to predict the correct direction. Now, before you even begin trading, we learned how to allocate capital appropriately to binary options as a trading strategy. We talked about brokerage accounts, opening at least one, possibly two or more trading accounts, depending on how much capital you have available. We talked about considering your brokers carefully to make sure that you choose brokers that you trust and that have features that you really value. Once your accounts are open, you should have a bonus to get started in your trading and try out your trading strategy without risking your seed capital. We learned about diversification in the risk management series, so you'll want to diversify your trades in multiple ways. You want to diversify underlying assets, expiration times, entry times, and even direction, up or down, put or call. We learned how to set up trades by navigating through one broker's site, OptiMarkets. We learned how to choose assets, narrow that down, choose the right direction, pick which expiration we want to trade, and enter our investment amount. After we finished with the basics, we then dove into more detail in our intermediate videos. In our charting lesson, we learned a lot about how to read and use candlestick charts to find good trading opportunities. We covered concepts like momentum, support, and resistance. We learned about the different types of binary options, such as digital, turbo, touch, one touch, and range options. We talked about some of the similarities and differences among the different types and some situations that you would use these more complex types of binary options. We then learned how to plan a successful trading day, including some trading strategies that need to occur at specific times, like the 8:30 U.S. jobs number or corporate earnings strategies. In our advanced topics, we covered advanced technical analysis and charting techniques like moving averages, crossovers, Bollinger Bands, relative strength, and average true range. And in this lesson, we talked about option strategies that involve trading multiple binary options at or around the same time by stacking, layering, and hedging. So now you know the basics of binary options and beyond. You should be able to take what you've learned and develop a profitable binary options trading strategy. Like everything else in life, it might require a little bit of a learning curve, and not every trade can be a winner. But take it from me and the other successful binary options traders out there. It can be easy and fun to make money trading binary options. So that's it for this lesson. If it's your first time through, I suggest you watch it at least one more time to make sure you have a handle on everything we talked about today and in this series. My name is Reese Shapiro. I'm your binary options trading coach, and I want to thank you for taking the time to watch and learn from our video series.